This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us by the telephone, our financial and diamond expert, Harold Siegel. We're taping on October 28th, 2016. Our time is 8:48 Mountain. Radio show runs Sunday afternoon at 3 o'clock on 630 CHED. And I should remind you, next week, we are going to be on Sunday, 12:30 to 1:30. The Oilers are playing the Red Wings. We're on 12:30 to 1:30 on 630 CHED. Remember, if you ever miss a radio show, they're archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. And, of course, it's going to be a busy period of time here in the next 2 weeks. We have a time change on November the 6th. It's the spring forward, fall back. Clocks go back. And on November the 8th, finally, after, I think it's been a good 50 years that they've been running for president. Seems to have gone on forever. But finally, on November the 8th, we will have some, maybe, if it's not contested, there's a bit of an idea who's going to be the next president of the United States, Hillary Clinton or, yes, Donald J. Trump. Finally, it will be coming to an end. And it will be interesting to see how the markets react. Now, next week, the Fed will meet in the United States. I would be shocked if they raised interest rates, because I think if they're going to do anything, they'll wait until after the election. But the Fed will meet next week. They will decide whether or not to raise rates. The expectation is more than likely December. And Harold, if that's the case, I think we see the U.S. dollar strengthen. Canadian dollar will continue to go down. And if you're in U.S. assets, a very smart place to be right now.
You better believe it, Randy. And again, this is definitely going to continue. So even without raising interest rates at this point, the U.S. dollar has rallied very strong this week, and we're sitting right at 99 cents. Again, I know trading currencies can be a little bit confusing, but the fact is that the U.S. dollar is the main currency in the world. Everything is basically priced in U.S. dollars. Oil is, commodities is, gold is, all that type of thing. And the fact is that when they say that the U.S. dollar is up or the British pound is down or the Canadian dollar is down, it's always against the U.S. dollar. And the fact is that what they do is they have a parcel of currencies. It includes the Japanese yen, the Canadian dollar, the Australian currency, the euro, the Swiss franc, the British pound, and they take an average of them, and that will determine where the U.S. dollar is traded against this basket of foreign currencies. So right now, as we're trading, the U.S. dollar is trading just at 99 cents. When I say that the U.S. dollar is trading at par, that means it's trading right at $1. Now, the fact is that the U.S. Is the only country in the world right now that can raise interest rates. No other country is or even considering doing that. In fact, every country is lowering interest rates. Interest rates are below 1% in most countries, and in some countries, the interest rates are negative. So you basically, if you had your money in the bank, you would be paying the bank in order to keep your money in there. How crazy is that? I mean, nobody ever felt that this was something that was going to happen in our lifetime, but it's certainly happening at this point, and it's going to get more and more severe. Now, the thing is that if you sit around and do absolutely nothing, you're going to be a victim of what's happening in the markets. And there's absolutely no doubt that the U.S. dollar is not only going to break par, but the U.S. dollar is going to go to 109 to 110. At the same time as the Canadian dollar, because the currency is a little bit rough at this point, is going to probably drop to 160 to 170. Right now, the Canadian dollar is trading at 134. So if you just stay in your Canadian dollar-based investments, you're going to find that you're not going to do very well. For the last 5 years, I've been urging my clients to get out of Canadian dollar-based investments and put your money in the U.S. dollar. And that's turned out to be one of the best trades that we've ever recommended. In fact, it's only going to get better and better. The U.S. dollar will continue to strengthen as all the currencies around the world continue to weaken. The reason that I'm bringing up the Canadian dollar is not to put down the Canadian dollar or the Canadian economy. I'm a Canadian myself, as is Randy. I'm very proud to be so. But the fact is that this is what's happening. And if you don't do anything about it, you're just going to get hurt beyond belief in this market. Just look what happened in England 2 months ago with the Brexit vote, where people that did nothing lost 25% of their net worth in one day. That's how severe the currency market can be, and if you don't know what you're doing, you can lose an awful lot of money. Now, my clients, and we're a very conservative firm, we're in U.S. dollar-based investments that pay tremendous returns. My clients are making close to 25% return in U.S. dollars in a year, and they get paid every single month on it. So perfect for retirement. Most people will never be able to retire because, let's face it, with interest rates at 0.5% and soon to go into negative interest rates, how in the world will people ever live off their money? And because interest rates are so low at this particular point and going lower, it means that you're not getting any return on your money, and it unfortunately forces people back into a very risky stock market, which is definitely not the place to put your money. 90% of the people that trade stocks lose. So why in the world, unless you're an expert stock trader, would you want to put your money where the odds are so much against you? So the fact is that 90% of people that trade stocks and commodities lose their money. That is not an option for most people at this point. Then keeping your money in the bank and getting a 0.5% return, which ultimately you end up losing on because of inflation and taxes. So where does somebody go in order to do anything with their money? Unless you're a multimillionaire that can basically just sit back and live off of their money, spend their actual equity. Otherwise, most people will not be able to retire because, again, getting a 0.5% return on your money at this point and soon to be negative interest rates is certainly not a way that most people are going to be able to flourish. So we do have private investments that pay in U.S. dollars and pay way higher than what any investments out there are doing it. So we've been in business over 35 years, and some of the programs that we are offering to our clients have actually been around for over 100 years. They're fourth-generation investments from my partner's family that has been in the business for going on 4 generations now. So we've got tremendous opportunity here. So as we're speaking right now, gold is trading right at around $1,270. I see gold falling further over the short term. I see gold dropping to around 1,100, maybe 1,050. See, there is a direct correlation between gold and the U.S. dollar. So basically, gold will rally, gold will go up in value when the U.S. dollar is weak. But when the U.S. dollar is strong, gold is going to fall, and that's what's happening at this particular point. Gold is trading right at around $1,270. It was only a couple months ago that the market was trading at $1,350. In actual fact, it hit a high of $1,375, or $100 lower on the price of gold. And I'm not bragging or anything, but I'm about the only analyst that was calling for that to happen. Silver went from $20 down to around $17. So why do I feel the gold is going to drop? I feel the gold is going to drop because the U.S. dollar has to go higher at this particular point. However, there are other factors in the gold market at this particular time, fundamental reasons why gold could actually stick in there. And one of them is the elections, the uncertainty of Donald Trump getting in. That would be, in my opinion, a catastrophe. In actual fact, the presidential elections in the United States is the biggest joke that I've ever seen. I just find it incredible to believe that of all the millions and millions and millions of people that live within the United States, that Hillary Clinton and Donald Trump are the 2 best choices. This is going to turn out to be a disaster no matter which one of those people get in. However, because the market is sort of comfortable with Hillary, the fact is that if Hillary does get in, and there's a very good chance that she will, that the markets will remain fairly even, that we're not going to see any major changes in the marketplace. If Donald Trump gets in, the uncertainty of a loose cannon like him could be short-term crazy for the market. The currency markets could go crazy. The U.S. dollar could basically fall short-term. the stock market could fall substantially just based on the fact, the uncertainty of what this guy brings to the table. So we're going to have to see what happens with the elections. Again, it'll be a short-term situation, but all in all, what I see happening at this point is gold dropping. I see gold going down to about 1,050 to 1,100. I see the U.S. dollar breaking par very soon and going to 109, 110. I see the Canadian dollar going to 160 to 170. And if you make the moves that I'm recommending that you make, get out of Canadian dollars, get into my private investments that are based in U.S. dollars, even though you're going to take a hit at the beginning, you're going to make a tremendous amount of money on the currency exchange, and you're going to make a tremendous return on the actual investment. So, again, short term, I see gold and silver dropping. I see the U.S. dollar rallying very strong. I see the Canadian dollar and all other currencies falling substantially compared to the U.S. dollar. And again, if you're not making money at this particular point, my clients are making over 25% a year, and they're making it in U.S. dollars.
Speak with Harold personally, privately. The call is free. Anything you discuss, 100% confidential. 1-800-432-1022. 1-800-432-1022. The website is rarecoloreddiamonds.com. Next week, next Sunday, we are on from 12:30 to 1:30. Prior to the face-off show, the Oilers and the Red Wings go at it next Sunday. And good luck to our Oilers. One of the stories that we've been following for quite some time is American debt and deficits. And Greg Hunter, formerly of CNN, interviewed Lawrence Kotnikloff. And he says the United States is actually bankrupt. He's a Boston University economics professor. He's running for president with a write-in campaign. He says we need an economic expert, not a politician, to fix our severe financial problem in the United States. He says our democracy is in trouble. We have 14% of the electorate who have chosen Hillary Clinton, and he's talking about the Democratic Party. Now, 14%, the Republican Party, have chosen Donald Trump to vote for. The vast majority of the population realizes neither Clinton nor Trump are qualified. Just on the economic front, these folks have no idea how fiscally sick the United States is. The fact that they have off-the-book liabilities that make their debt roughly 15 times larger than the amount the government is actually reporting. So the true debt is $206 trillion. That's right, $206 trillion. The debt the Congressional Budget Office tells the U.S. citizens about is roughly $20 trillion. So they're short a lot. It's actually $206 trillion. The United States is 53% underfinanced, so the country is actually bankrupt right this minute. It's not $206 trillion in the future that they owe, it's $206 trillion today. It's our credit card, and we're broke, Klotnikov goes on to say. So if you put everything on the books, we're broke, and we've been printing money out the wazoo since 2007 to pay congressional bills. That's the truth about quantitative easing. We need to have somebody who knows what's going on with the big picture here and has a game plan to get rid of this fiscal gap and do it without total chaos. If we leave things the way they are, people will view the country as leaderless fundamentally and printing money to pay its bills. Then the expectation will occur, and that's going to raise rates. And that's going to drop bond prices that will sink the banks. And yes, you can have another great recession like Bill Gross is referencing, a bond supernova. I've been saying for quite a few decades, the time for the last straw to drop on the camel's back. And when it's going to drop, that camel is going to fall hard. If you look at the fundamentals, and the fundamentals look like that of an emerging country, we are the most indebted, developed country in the world relative to GDP of any country around the world. We are in worse shape. I believe that Russia or Greece And we're actually even in worse shape than Italy, according to Kotnikoff. And he believes that the United States is in serious financial difficulty. He has a write-in campaign for president of the United States. And Harold, the reason we bring this up is, obviously, yes, the United States does have a debt and deficit problem, but when you look at all the currencies of the world, you look at the different countries of the world, they are the least dirty shirt. And that's why people are moving into the U.S. stock market. That's why people are moving into the U.S. dollar, because if you take a look at the world in totality, it's the least dirty shirt. And it's not pretty, but their day of reckoning, we don't know when it will come some point. But in the meantime, as you've said, the place to park some of your money is in U.S. dollar investments.
Absolutely, no doubt about that. And again, when we do see a rise in interest rates, that's only going to send the U.S. dollar that much stronger. You know, back in 2011, when gold was sitting just below $2,000 an ounce at 1920, the U.S. dollar was trading at 72 cents. Now it's at 99 cents, and gold's back up to, $12.50. So there's a direct correlation between gold and the U.S. dollar. And the fact is that you need to understand the currency markets if you're going to make any type of money. Today, the fact is that it's very, very difficult to make any type of return on investment. So the first thing when you do invest money, the first and foremost is capital preservation. Making certain that you're not just throwing your money away and speculating, that you're actually giving your investment some thought and deciphering what the risk is. Because the fact is that if you don't understand the risk, then there's no chance of the reward. So what you really need to do is you need to understand what's happening in the currency markets. The currency markets are the heaviest traded markets in the world, and they affect everything that we do. All you have to do as Canadians is travel to the United States at this point to understand what the currency markets are all about, because it would cost us as Canadians $1,334 at this particular point to buy $1,000 worth of U.S. dollars. So it would cost us $1,340 to buy $1,000 worth of U.S. dollars. That's because the Canadian dollar is trading at 134 against the U.S. dollar. So there are opportunities to make an awful lot of money if you understand what you're doing, and I've been in this business for 35 years. In actual fact, when the euro first started trading, it was my recommendation to my Canadian clients, and we bought the euro at 80 some odd cents and rode it all the way to 167. My clients made a fortune in the currency markets. We did the same in gold. We started buying gold at 250 and rode it all the way up to $1,900. So, we're very good at picking trends, and at this point the major trend is in the U.S. dollar, and you need to get out of Canadian dollars and into U.S. dollar-based investments, and I have those investments for you. If you're looking to retire, I have investments that can give you an income every single month and pay you in U.S. dollars. So, again, at this point, what Randy's saying is 100% true. The U.S. may be in trouble, but it's in much, much better shape than any other country in the world at this particular point. So just like what happened in Britain with Brexit, the people that didn't trade the currency correctly at that point actually lost 25% of their net worth in one day. I had clients that were substantial clients that actually we traded and took a spread on it, and I have one client that made over $25 million in one day. Huge trader, but we took a very aggressive trade on the market, and he made $25 million in one day on the market. So that's what the currency markets can do for you. And again, I've traded currencies for over 35 years, and that is the major position that my clients are in at this particular point.
Our featured diamond of the week from rarecoloreddiamonds.com, and we'll talk more about diamonds in the second half of the show, is a .23 carat baguette cut fancy blue. This is a beautiful diamond. It's a museum piece. rarecoloreddiamonds.com, the website, featured diamond of the week. See video of the diamond there. We have a picture of it in our free weekly newsletter. If you'd like to get our free weekly newsletter, you can go through it in 5 minutes or spend hours. Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022. In the second half of the show, we'll talk about an ultra-rare $25 million sky blue diamond that's going up for auction in Geneva, Switzerland in November. Also, we're going to talk about pink diamonds, and it's interesting how people are investing in pink diamonds down under in Australia. Connect with Harold, rarecoloreddiamonds.com, rarecoloreddiamonds.com for information on the investment opportunities that he has, our featured diamond of the week, and our free weekly newsletter, 1-800-432-1022, 1-800-432-1022. And the big question is, it's very hard to retire today in the financial and geopolitical world that we find ourselves in. Everyone is really worried about losing their retirement money due to another financial crash. We had the crash leading up to the year 2000. Right after 2000, the NASDAQ got whacked, and it took, close to 16 years for it to come back. And people are in a position now where they're at retirement, near retirement. They do not want to be wiped out yet again, as we were in around, during the financial crisis, which was 2007, 2008. The market bottomed in March of 2009. Let's face it, we're all in the same position. No one wants to go through another financial crash. Everyone is worried about losing their retirement money just as they're about to retire. And the question is, for some of us, will we ever be able to retire based on wanting to be in safe investments and due to the fact interest rates are so low? With low interest rates, central banks have manipulated stocks, bonds, and real estate to a point where historically they are overvalued and could face a major correction at any time. And Harold has talked about it before. There's Bill C-15 that was passed in June of this year. What does that mean to the average Canadian investor? Speak with Harold and find out more. Connect with Harold at 1-800-432-1022 if you've not heard of Bill C-15 and how it affects your financial health. There are bank bail-ins over in Europe, negative interest rates, oil prices, weak Canadian dollar, people concerned about a housing crash in Vancouver and Toronto, more talk of cashless society. Lots of financial questions today with so many people looking for answers. And as Harold has said, that's why he's been doing the show now for 17 years, to give you the answers via our radio show and obviously through our newsletter. That's why we do the radio show. So if you're confused as to where you should be putting your money, speak with Harold, connect with him, 1-800-432-1022. The website is rarecoloreddiamonds.com. Obviously, listen to our radio show, get our free weekly newsletter, and just know that Harold is there for you. If you would like to speak with him personally and privately, he'll be happy to take your call and talk about the programs he has in place to invest in where you can start making money and you don't have to worry about bail-ins and negative interest rates. Connect with Harold, 1-800-432-1022. We're going to come back and talk about diamonds. As the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on October 28th, 2016. Our time is 9:12 Mountain. Our radio show runs 6:30 CHED in Edmonton, Sunday afternoon at 3. And we've been moving around a little bit due to Edmonton Oilers hockey. And next week we will move again. On November the 6th, the Oilers are playing Detroit. The Red Wings and Oilers were on prior to the face-off show, 12:30 to 1:30 p.m., 12:30 to 1:30 p.m., prior to the face-off show. The Fed meeting in the United States next week to decide about interest rates, and then the week after, November the 8th. It's a Tuesday, Election Day in the United States. Finally, the people of the United States will be done with what seems to have been the longest election in the history of the world. We will hopefully have some clarity on Tuesday, November the 8th, who will be the next president of the United States. And I should mention next weekend as well is time change weekend. The clocks will fall back 1 hour. Spring forward, fall back. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022. Our featured diamond of the week is a .23 carat baguette cut fancy blue. This is a museum piece. It's a beauty, and it really has been the year of the blue diamond. In fact, an ultra-rare 25 million sky blue diamond hit the auction block at Sotheby's. Will the rock break records? We'll find out. It's 25 million. Sotheby's Geneva sale, November the 16th. Leading the sale is a 8-carat rock dubbed the Sky Blue Diamond. It was described by worldwide chairman of Sotheby's International Jewelry Division, David Bennett, as a wonderful, clear, celestial blue. And with an estimate of 15 to 25 million, it has an equally hefty price tag to match. It really is the color of a summer day with this beautiful brilliance and subtlety about the stone. Bennett told Reuters the GIA has bestowed the highest possible grading of fancy, vivid blue upon the stone. And Harold, there's a picture in our free weekly newsletter of this diamond. It's absolutely gorgeous, but I would say the fancy blue diamond we have for investment purposes this week ranks up there with it. It's a beauty as well. And you can just see this year, there's no getting around it. As much as pinks are just an outstanding investment, 2016 will be known as the year of the blue diamond.
You are so correct, Randy. I really am so blown away by how much blue diamonds have gone up, especially in 2016. The fact is that back in 2005, a vivid blue diamond sold at auction for $200,000 a carat. Now these diamonds are selling for over $4 million a carat. So when you're talking about returns on investment, long-term investments, nothing rivals diamonds. Blue diamonds, again, since 2005, so you're talking 11 years, have gone from $200,000 a carat up to $4 million a carat, and soon to be much higher than that. We anticipate that the price of blues could go to $5 to $6 million a carat. We talked about Shirley Temple's diamond that was purchased back in 1940 for under $10,000, around $7,000, and the diamond sold this year for $25 million. So again, these are the type of returns that are available long term in the rare colored diamond market because they're so rare. None of them are the same. It's almost impossible to get a matching set of colored diamonds. You can get close, but the chances are you'll never get one actually, as a total match type of thing. As well as blue diamonds have done and will continue to do because of the rarity, it's that boron seeps into the ground and turns a diamond blue. They're the same composure as any other diamond, a white diamond, a blue diamond, a green diamond, an orange diamond, a red diamond, a yellow diamond. They're all compressed carbon. They're all made of the exact same thing. However, when a mineral seeps into the ground and changes that diamond to blue or green or orange or yellow or whatever, it increases the value of that diamond substantially. And that's what's happened with blue diamonds. Now, we've been recommending for the last decade that we buy pink diamonds because 95% of the pink diamonds in the world come from one mine. It's the mine in Australia called the Argyle mine, and this mine is famous for producing 95% of the pink diamonds in the world. Now, it's not a big number. In actual fact, it's a tiny number. The amount of pink diamonds that are available per year is about 55 or 60 diamonds that are about a half a carat to a carat that are offered through the Argyle tender, which just ended in October. So the fact is that these pink diamonds are known as the most amazing diamonds. Again, they're smaller diamonds, but the fact is is that they have tremendous, tremendous value to them. And even a half a carat diamond could be worth $1 million or more. And the exciting thing about the pink diamond market is that the Argyle mine is getting ready to close. It's been in operation since 1986. It produces 30 million carats of diamonds a year, but those are mostly low-grade industrial white diamonds. The amount of pink diamonds that come out of that mine is actually only enough to fill a champagne glass. That's how small the pink diamond market is. But this particular mine, the Argyle mine, produces 95% of the world's pinks. It's going to close in about 3 years. There will be no more pink diamonds. So if you happen to own a pink diamond from the Argyle mine, your returns can be substantial. Much more substantial than anything that most people are investing at this particular point. And obviously, with interest rates at almost zero and the stock market as risky as it is, there's not a lot of investments for people out there. The rare colored diamond market is an excellent investment, especially for a younger family that could put a diamond away for 20 or 30 years. You know, the fact is I put away these type of diamonds for my grandchildren. I don't buy them stocks. I don't buy them really anything except for diamonds. And my younger grandchildren, I put these diamonds away in their safety deposit boxes, not that they know that they own them yet. And when they get to be in their, mid to late 20s and ready to get started in this world, maybe a diamond I paid $20,000 for could be worth $100,000 or $200,000 for them. So that's the way that I invest my money. I'm extremely conservative, not a risk taker, even though I've traded some of the riskiest markets in the world. And the fact is that rare colored diamonds are an extremely safe investment. When you talk about capital preservation, that's the epitome of that, because they never ever decline in value. So if you buy a rare colored diamond and put it away, that diamond's not going to lose its value, but it's going to go up in value over time, and some of them can go up tremendously. So we have diamonds that start in and around the 20,000 level, and we have diamonds that go up as high as 40 to 50 million. The majority of our clients that invest in diamonds under 250,000. Fact is that even a diamond, a yellow flawless diamond that sells for 20,000, back in 1980, that same diamond sold for $500. So from $500 in 1980 to $20,000 today is not a bad return. And the longer you hold on to that diamond, the more and more and more it's going to go up in value. So, Randy, you're 100% correct. The blue diamonds have been off the chart, amazing, and will continue to do so. We're very enthused with what's happened with blue diamonds this year. But once the Argyle mine closes and we get closer to that date, which again is only 3 years from now, you're talking about what I think on the very high-end pink diamonds, similar type of returns. Pink, vivid diamonds that will sell, in the $2, $3, $4 million range for a substantial diamond. So again, we're very, very excited about that. Yellow diamonds at auction are doing tremendously well. The next trend in diamonds is going to be in green and orange diamonds. What turns a diamond green is uranium. When uranium seeps into the ground, it could turn a diamond green. Recently, a vivid green diamond sold for $3 million a carat. We mine these diamonds. We mine these diamonds ourselves and sell them to our clients, and we have programs where our clients can invest in the rough diamonds with us. So those returns are tremendous. You could literally double your money in less than 2 years. So there's opportunities out there for you to do extremely well and to do extremely well in U.S. dollars. And the reason that we do this is because, number one, our programs are doing very well, and it not only helps our clients do very well, but it helps my company do well. Then on top of that, again, it's all in American dollars, and the American dollar is the currency to be in at this point. So we're very strongly recommending pink diamonds from the Argyle mine, and we're now saying to buy green and orange diamonds, because those are the next diamonds that are going to make these monumental runs, and we want to make certain that our clients are in those investments.
Featured diamond of the week is a blue diamond. It's a 0.23 carat baguette cut fancy blue. See it online, rarecoloreddiamonds.com, featured diamond of the week. You can see a picture of it in our free weekly newsletter. Connect with Harold, 1-800-432-1022, rarecoloreddiamonds.com. We have two great articles this week in our newsletter about diamonds. We have the sky blue diamond story that we were talking about. Also, self-managed superannuation funds are buying into Argyle pink diamonds. And those are retirement funds. It's like RSP, TFSA, RIF. One of the exclusive sellers of Argyle pink diamonds says a number of stones are being purchased for self-managed retirement funds. Rio Tinto's Argyle mine in the eastern Kimberley region in the far north of Western Australia is the only source of the diamonds, and it is scheduled to close production, as Harold said, within a few years. Australian jewelers Linley's is currently displaying the largest commercial collection of pinks around Australia. And they go on to say, as an investment, it's the most concentrated form of wealth in the world if you're looking at the weight of what those diamonds are, according to CEO David Farden. Relative to white diamonds, which are already a much sought-after product, the pinks can fetch up to 20 to 30 times the price. With all the other things being equal in terms of size and cut and shape, there are some where the intensity of color is so strong that it might command prices that are 50 times more. Rio Tinto says the rare pinks, as they are known, are only 1% of all the diamonds recovered from the mine. And there are roughly 35 luxury jewelers or ateliers who are officially allowed to buy and sell the rare Argyle pinks. Rio Tinto sells, and they have a collection by invitation only. It's their private tender that ended earlier in October, and it travels the world. People bid on it, and obviously you have the rarest of the rare diamonds, enough to fill maybe a champagne flute or a little bit in someone's hands. We're talking about the rarest of the rare when it comes to the Argyle pink tender. But it is interesting to note that people in Australia are, with their retirement funds, buying Argyle pink diamonds and tucking them in. And another side note, Argyle pinks have increased in value on average 15% a year for the last 10 years. And as Harold touched on, with the imminent closure of the mine slated for 2020, that would make the diamonds more rare. And a financial advisor, his name is Mr. White, and he goes on to say that not is it just a good investment to pop in a retirement fund, but from a supply and demand point of view, yes, less supply and increased demand is a positive. But the other thing we've seen in the last decade is an increase in demand for diamonds, particularly pink, from China and India. That's been part of what's driven up prices over the last 5 to 10 years. And if that continues, yes, then you're going to see prices continue to go up. That according to Andrew White, an investment strategist in Australia with a company called BDO. But Harold, I thought it was quite interesting. This is a story from Australia, but if you have a retirement fund in Australia, you are allowed to put away Argyle pink diamonds, and it seems a lot of people are moving in that direction when they hear about making about 15% a year. Well,
again, 15% a year, and that's how much the diamonds have gone up over the last 5-6 years. However, when you get closer to the actual mine closing, then you're going to start to see these diamonds really start to pick up steam. So there's still deals on Argyles. The fact is that we've got 3 years left. It'll outperform any retirement savings plan that you have. So you should definitely consider where you're going to put your money, how you want to invest going into the near future, and look at alternative assets, because assets like stocks, mutual funds, don't do what they used to do. In actual fact, when companies are going bankrupt, companies back in 2008 like General Motors and Chrysler and all the banks and everything, the fact is that when you're investing in paper, you could lose all of your money very easily. It's much more difficult to do when you actually hold the actual asset. That's why gold will always be a good asset. The fact is that it goes up and it goes down, but the fact is that gold will always have its time, and gold's time is coming. Short term, we're looking for a pullback in gold, but we do believe that gold will be one of the best investments out there, and we are very, very bullish, intermediate and long term on gold. We do believe that gold is going to go well over $2,000 an ounce and probably go to, levels of $3,000, $4,000, $5,000 an ounce as the world unfolds into much more difficult situations. So, just in the time that we've been talking about diamonds, gold went from being up $5 to down $1 within the last 5 minutes. We've seen a $6 drop in gold within that period of time. So, again, we know what we're talking about when it comes to currencies and those type of investments. And where we don't want you to trade the currency market because it's way too risky and heavily leveraged, we do want you to be in the strongest currency because that's where you're going to make a lot of money. And again, all Randy and I care about is our listeners to our shows and our clients doing well with us. That's why we do the show. We don't charge for the radio show. We don't charge for seminars or the newsletter or anything that we do. Even when I come to Canada, to do a seminar and 2,000 people show up, we pay for everything. We would never charge our listeners ever to get advice. In fact, if you need to understand something, if you don't understand currencies or commodities or the relationship between gold and the dollar and all that, then call me up. I'll spend as much time with you as you need and explain everything to you so you understand how these markets work and what your options are. All Randy and I want is for the listeners to our show, our Canadian friends, to do well. And in most cases, it's extremely difficult to do well today because the markets are so difficult to trade. So, again, we're here for you 100%. We always have been. This radio show's been on for 17 years. We're most well known for calling the gold market when nobody else was bullish on gold. Back in 2000, we recommended gold at $250. We told all of our clients to sell their stocks and everything and buy gold, and it went all the way to $1,900. We have clients that literally turned 100,000 into millions of dollars. That's how much that market went up. So again, we do see some tremendous opportunities coming. We see some great trends in markets that are coming. One is in the U.S. dollar. One is in gold for the long term. One is in pink diamonds, and the other is in green and orange diamonds. These trends you want to pick up now because, again, when you get in at the bottom, the fact is that that's where most of the money is made. So, again, all Randy and I want is for the listeners to our show, and there are many out there, to do well, and we have the wherewithal in which to help you.
Featured Diamond of the Week from rarecoloreddiamonds.com. A 0.23 carat baguette cut fancy blue. And if you're saying to yourself, it sounds beautiful, well, go take a look right now. See it at rarecoloreddiamonds.com. Featured Diamond of the Week. We have video there. We also have a picture of it in our free weekly newsletter. Get our free weekly newsletter. It has the story on the ultra-rare 25 million sky blue diamond. We'll keep you up to date on that when it goes on sale November 16th. Also, retirement funds in Australia, people putting money into retirement funds that includes pink diamonds, Argyle pink diamonds, people using Argyle pinks as retirement. Connect with Harold, rarecoloreddiamonds.com. 1-800-432-1022, 1-800-432-1022. And when you talk about 5 compelling reasons to invest in diamonds, we're talking about privacy. Privacy in this day and age is so important. We saw that with Kim Kardashian recently being robbed. And one of the reasons, she's running around on all the different social media outlets with all her bling. And it caught up with her. It was shocking that she didn't have better security, really. But privacy is a very important aspect of having hard assets. Also, portability. And this is one of the great things about diamonds. They're portable. Real estate in your pocket, as Harold educated us well over 10 years ago. Estate planning. As Harold touched on with the Shirley Temple Blue Diamond, purchased in 1940. for around $7,000 by her father for her birthday, and her estate sold it earlier in the year for over $25 million. And obviously, that is a massive home run for her heirs and the estate. Price stability. That's one of the great things about diamonds, is the stability of the price. Even during the financial crisis, diamonds withstood crazy price moves up and down. And the thing that we like about diamonds, long-term growth. As we touched on with that story out of Australia about Argyle pink diamonds, over the last 10 years, Argyle pink diamonds have gone up approximately 15% a year. But Harold, you can make more, and that's what people have to understand. If you get the right diamond, maybe you invest in a rough diamond, it's cut, and it turns out to be a massive winner, there is the opportunity to make much, much more money. It just depends on how you choose to go about investing in diamonds at this point.
You better believe it. Again, there's some tremendous, tremendous opportunities in diamonds, not only owning the actual physical diamond, which is a great investment, but investing with us in our rough diamond parcels, which have been tremendous. We actually pulled out this year a 50-carat D-flawless white rough diamond that's going to cut down to a 30-carat D-flawless white. We also purchased some of the most amazing green diamonds, including a 7.5-carat vivid green rough that is one of the rarest diamonds in the world. On top of that, we recently just purchased the most amazing vivid orange rough diamond. We showed it one day. Was it about 2 months ago, Randy?
That's right. It was a beauty. We had
vivid orange rough, one of the rarest diamonds ever. And again, the people that saw it were just in total disbelief. So we allow our clients and friends to invest with us on these parcels. The returns are substantial, along with the fact that we're in American dollars, which are substantial. It's just a win-win situation. And again, if you're concerned about retirement or where your investments are going or how you're going to get through these difficult times, just give me a call next week. I'll sit down with you and explain everything and see if this is right for you. But again, many of our clients, especially clients that were up in Fort McMurray, if it wasn't for these private investments, would be in trouble today. I'm very happy to say that a lot of the things that we've done have turned out extremely well for our Canadian clients.
Speak with Harold personally, privately, 1-800-432-1022. That's 1-800-432-1022. The website is rarecoloreddiamonds.com. rarecoloreddiamonds.com. And over the past month or so, we have featured, as our featured diamond of the week, we've had some yellow diamonds. We've had some red diamonds. As Harold touched on, we had two roughs. We had the orange, but we also had a green rough diamond that was absolutely gorgeous. Our featured diamond of the week is a .23 carat baguette cut fancy blue from rarecoloreddiamonds.com. See it online, rarecoloreddiamonds.com, featured diamond of the week. And if you would like to learn more about investing in that diamond, call Harold. When we're talking about diamonds, we're talking about nature's art. You know, really it is millions of years in the making. Rare colored diamonds, they're private, portable, stable wealth. And if you have not taken a look at investing in a hard asset like diamonds before, now's the time to do so based on what's happening in the world, not only financially, but geopolitically. And Harold, we have about 30 seconds left here.
Well, again, it's a crazy, crazy time. The U.S., I don't know what is going to happen as a result of these elections, but there's going to be fireworks. And again, I just find it impossible to believe that of all the smart people in the United States, those were the two best candidates. But we shall see what that is going to be. Meanwhile, I wish everybody a wonderful weekend and a very profitable day.
Thank you very much, Harold Siegel. Don't forget, next week, we are going to be on Sunday from 12:30 to 1:30. Prior to the Face-Off show, the Oilers and the Detroit Red Wings. So next week, 12:30 to 1:30, prior to the Face-Off show, Oilers and Red Wings. And we have the time change next week as well. And happy Halloween to everyone who's heading out tomorrow. And that includes Harold's grandson, who's heading out as Iron Man. So good luck to Iron Man and getting lots of chocolates tomorrow. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.